I was a struggling trader until I switched up my approach on how I viewed the market, and I started doing things that I'm going to explain to you in this video. So if you're watching this and you're a struggling trader, you're failing to find a strategy, your emotions are holding you back, you have large losses, and you just can't figure out trading, well, listen to the advice in this video because I'm confident it's going to give you a jump start for you to start seeing small, consistent gains. I was a trader who struggled for about 2 years' time. And it wasn't until I did these 4 key aspects that we're going to talk about in this video that I began to see light at the end of the tunnel. And the first one has to do with removing all lagging trading indicators. One of the most influential changes to my trading, because it really made me struggle and it was just so much noise in my trading, was removing every single one of the indicators that I had on my charts. My screens look like this. I had the MACD on there, the RSI. I had about 3 different moving averages. And if you use these and have success with it, there's nothing wrong with it. However, my approach was the wrong one, as I was looking for a holy grail with these, a strategy that I could build that has a 100% win rate, that I'll never be wrong just because this happened. Then the next result is going to be the market's going to go up or down in my favor. First things first is there's no holy grail. There's nothing that works out 100% of the time. I want to make that very clear. However, these indicators and majority of the indicators that I see a lot of retail traders use, and I was a victim of this myself, lag. What I mean by lagging indicators is they move after price moves. Anything that moves after price lags, and that will skew your risk to reward, and risk reward ratios are another very important aspect to trading. I began to see a lot more success when I switched my approach to a completely naked chart with supply and demand zones, key levels of support and resistance, and gauging volume around these levels. Volume is the most leading indicator that you will ever use in the market, because price changes and the market moves up and down because of volume being transacted. The stock market is an auction. It's very similar to a real estate auction, a car auction, watch market. Prices are going up and down because buyers and sellers are buying and selling goods. And in the stock market, a candlestick chart represents the behavior behind the price movement. So being able to read the market and look at it as an auction is an edge in itself. The market simply moves up because there are more aggressive buyers than passive sellers, and the market moves down because there are more aggressive sellers than passive buyers. That is the only way price can move up and down. It's not because the MACD just crossed over or the RSI said it was oversold what caused the market to move up. The market moved up because more aggressive buyers stepped into the market than passive participants. And since the market moved up, that is the reason why the MACD crossed over, or your moving average was pointing up, or the RSI was oversold and moved to overbought. So because of this, if we use our indicators in the most raw, authentic, leading way, such as volume and true organic price action, that will be the most powerful edge instead of focusing on lagging indicators. The best advice I could give you is, if you're struggling, if you feel like you have too much noise in your trading, with one indicator being bullish, one indicator being bearish, you're getting conflicting signals, it's as simple as removing what's causing noise in your trading and adding what truly moves the market. Focusing on true, organic, naked price action from a naked candlestick chart, and focusing on volume by time, and also, most importantly, volume by price. We can use tools such as a normal level 2, which will show us all passive orders on the order book, or a normal time and sales, which will show us completed transactions at a specific price and how much the quantity was, and we could spot large buyers and large sellers. Now, reading this information may be a little difficult in itself, which is why more sophisticated tools will help us read the market's auction in a clearer and more simplistic approach, such as a footprint chart, such as a heat map, or even a depth of market, will all show us the same information regarding volume and how it affects price, just visually in a different way. The volume that we see on a depth of market, level 2, time and sales, footprint chart, heat map, all is what causes price to move up and down, and the candlestick chart is simply a mechanism to display that data. So if I want to see buyers and sellers enter the market, I'm going to look at the volume being transacted via a time and sales or one of those sophisticated tools such as a depth of market. And if I see buyers and sellers, I am getting in the market in real time, the present moment, in the most leading fashion. It's not lagging, waiting for the RSI to say it's oversold for me to get into a position. My most recent trading video was actually in depth of all these examples. I'll link that in the description below if you have not seen it. But I like looking for trap buyers or trap sellers because that's an edge in itself. So let's say over 1,000 contracts get traded at the ask, which means they are aggressive buyers stepping into the market and buying as the market moves higher. Well, if we see a lot of buying entering the market and the market's failing to move higher, that's telling me from an auction standpoint, again, raw, organic, true price action. From an auction standpoint, the market is failing to move higher, the buyers are exhausted, and it's likely the market will reverse and head lower. In this example, we could see a large positive delta by these blue bars near the high, around 4409 of over 1,000 contracts. The market failed to move higher there. Aggressive selling stepped in 3 bars and 4 bars after, and the market sold off thereafter. We could see that also from this chart where we see a lot of upper wicks, and by those red candles to the downside, aggressive selling steps in, and this will us be able to capitalize on a reversal to the downside by spotting where buyers are trapped at with a ton of effort and no reward near the highs. I also like looking for stop hunts and stop runs. Understanding where traders are buying or selling at, or where traders are stopping out at, is an edge in itself because where there is pain, there will be gain, and also spotting non-obvious things before they become obvious. In this example, we have an obvious low of day being put in by this red line. The market breaks this low of day, and it's safe to assume that sellers stepped into the market at the low, longs, stop losses were placed there, the market breaks that red line, volume then steps in and aggressively reclaim back above this level and rally higher. That's an indication that the market just broke this low to pick up liquidity and reverse the market higher. This is done using a naked chart focusing on true price action. Also looking at areas of supply and demand. These are areas of imbalanced zones where the market has a high odd of reversing at. When I switched my focus to these things and my charts became naked and I focused on the orders coming in at my levels of interest, that's when everything began to change and I slowly started taking better setups. There is more to this, such as risk management. Risk management is the most important aspect to no matter what trading strategy you use, indicators, no indicators, naked chart, cluttered chart, whatever strategy you use, risk management has to be at the top and it must be your number one priority. You're gonna lose trades, I lose trades, Warren Buffett loses trades. The best traders lose, it's inevitable. But what makes us stay in this game for the long run is how well we take the losses and how well we manage the losses via our risk management system. Our job is to not be right all the time. Our job is simply to make money. And the only way we can make money is being a very good loser, meaning when we lose, our losses are respected, our losses are known before we put the trade on, and there is no surprise to how much money we are going to lose if we are incorrect. If you can do that and you can exit when you are incorrect at a predetermined level based on risk that you are comfortable accepting before the trade is on, you can become a very good loser, and that is a winning mentality because the best traders will lose. Before I enter a trade, I know exactly how much money I am going to lose on that setup if I am incorrect on my analysis. Wherever my analysis is incorrect, I place my stop loss, I adjust my position size accordingly, and I know exactly how much I'm going to lose if my stop loss triggers, so there's absolutely no surprises. I never, ever enter a trade that has a risk to reward ratio under 2 to 1. What that means is if I'm risking $1, I need to make at least $2 profit or better. If I'm risking $1,000, I need to make at least $2,000, $3,000, $4,000, and the higher the number, the better. By doing this, I can afford to lose more times than I win, yet I am still profitable. Looking at this graph, I could have a 45% win rate, a 50% win rate. I am wrong more times than I am correct, yet I am still profitable if we focus on our risk to reward ratio. If we risk 1 to make 3, we can have a 30% win rate. If we risk 1 to make 2, we can have a 40% win rate, yet still be profitable. Risk reward is the most important aspect, and win rate does not mean anything if you are not risking less than you are profiting. You want to put yourself in the position to win-win, meaning if we lose and we are incorrect, our wins take care of those losses. I see many traders, they have a $500 win, but their loss is $1,000. Or they have consistent $50 win, $100 win, $75 win, but they have one loss for $1,000 that wipes away all those gains. You got to put yourself in the position that your winners are taking care of your losers by making sure you are only entering trades that have proper risk to reward ratios. If you can do that, you are setting yourself up in the long run for consistency and, most importantly, sustainability in your trading. Once I practiced proper risk management, my P&L curve of my account value was like an uptrending chart. Rallies were going higher and dips were getting shallower and shallower, and we were putting in higher highs and also higher lows. If you do not implement proper risk management, your chart is going to look downtrending, where large losses are going to completely destroy and deplete your money. After doing these first 2 points, it's now necessary and vital for you to journal all of your trades. Now, what do I mean by journal? You need to take down the setups that you took, understand where you entered, where you exited, what was the price you got in at, what time was it at, what type of setup was it? Was it a bounce off demand? Was it a sell off at supply? How was volume? Strong? Was it weak? And then annotate a picture of the chart so you can easily click that journal entry and see where you got in at and where you got out at visually by your annotation on the chart. Now, in the description below, I'm going to put a free Excel journal for options trades, and I'm also going to have TradeZella linked in there because it is a paid platform, which in my opinion is the best trading journal offered for anybody. I use it and it automatically collects all my data and quantifies that data on important metrics that I need to be aware of. I can input my stop loss, my take profit, and I can know how much I'm risking, how much I'm rewarding. I can put the type of setup, what my mistakes were, and I can visually collect all this data and see what I'm doing right and see what I'm doing wrong. Journaling, collecting data, and reviewing these data points is what changed my trading in my first 2 years. Once I implemented this, I had a folder of charts on my phone back in the day, and I'm talking 2016, 2017, where I put all my trades on there, what happened, what I did right, what I did wrong. And instead of scrolling through social media, I would go through my phone and go through all my journal entries so I can see and dissect my trading from the inside and out. And that is truly the only way you're going to get better, by dissecting your trading from the inside and out. It's good to take a setup today, and then maybe you're going to forget about it next week. But if we have the data, we can always go back to it and review what we're doing right and what we're doing wrong. As traders, we process so much information. We're not going to be able to remember what I did 3 weeks ago to the exact detail on it. But looking at my journal, I can see the exact detail, exactly what I was thinking at my time of entry, how much I was risking, my mistakes, the type of setup. So journaling is it's a vital aspect to your trading, and it completely changed it for me. And I gained so much confidence because of it. And that just resulted in me trading better. My life outside of the market has a direct correlation to my success in the market. Think about this. If I'm not patient, or if I'm not disciplined away from the screens outside of the market, what makes you think that as soon as I sit down and watch the market on a daily basis, what makes you think I'm going to be patient or disciplined if I can't do that outside of the market? So my success in the market is directly correlated to my activities outside of the market. For me, working on myself physically has helped me mentally behind the screens and mentally in other aspects of life. To make sure my brain is at peak performance, I am in the gym every single day at 4 a.m. getting a hard workout in and beating my body up physically. That way I know it's going to take care of the mental aspect. I need to get my body awake before I sit down in my chair behind the screens, and I know if I get my body awake, it's just going to awaken my mind. Here's a picture of a brain that's just awoken out of bed, sitting quietly with no stimulation, and here's a comparison that after 20 minutes of working out, 20 minutes of walking, there's stimulation in the brain. Think about this. If you want to perform at peak performance, well, your brain needs to be stimulated. You need to have an open mind. The only way we can trade efficiently is if we are trading at peak performance. The only way we can trade at peak performance is making sure our mind is capable of it. The only way we could truly make our mind physically capable of it, for myself, is by pushing my body physically, by working out in the gym, or even going for a run. I need to be laser focused. I need to have zero distractions. And by working out and pushing my body, it can do this. A lot of traders that I see, and I'm guilty of this myself, I would wake up 30 minutes before the market opened, hop right out of bed, get right behind the screens. My brain is still asleep. My brain is very foggy. I'm not going to trade efficiently. My mind is somewhere else. And I see a setup in front of me. I don't take it because my mind is not connected with the market. By pushing my body, it helps the connection with my mentality. And that is what I recommend. If you are healthy enough and if you are grateful enough to be able to work out, go for it and do things you do not want to do. Growth comes by being uncomfortable. Start getting comfortable being uncomfortable. And I'm confident if you listen to this advice I gave you in this video, it will propel you forward to start seeing a difference in your trading if you focus on the right things. It's very easy to get distracted. It's very easy to have a bunch of noise in our trading that's removing our focus from what ultimately matters. So please take my advice, rewatch this video if you have to, check out the links in the description below, and also if you learned anything from it, I would just really appreciate it to subscribe to the channel and click the thumbs up button on this video. But I'm going to end it. Peace.